Ever wondered about investing but felt stumped about where to begin? Well, you're not alone. Investing can seem like an intimidating realm filled with jargon and complex concepts. But let's uncomplicate it. Investing is simply about putting your money to work. Instead of letting it sit idle in a bank account, you give it a job to do, grow. It's like planting a seed and nurturing it to become a fruitful tree. And the best part? You don't need to be a Wall Street whiz or a millionaire to start. Investing is for everyone, and financial literacy is not a privilege, but a necessity. It's about understanding how money works and making it work for you. There are plenty of resources available to help you navigate the investment landscape, no matter your starting point. So, let's debunk the myth that investing is only for the rich or financially savvy. So, if you've been on the fence about investing, it's time to dive in and learn the basics. But first, why should you even care about investing? Well, let's imagine for a moment. You've been diligently saving your hard-earned dollars under your mattress. You feel a sense of satisfaction as you see the pile growing. But let's fast forward a few years. You go to the market, and suddenly, that loaf of bread you used to buy for $1 now costs $2. That's the biting effect of inflation, gnawing away at the value of your money. Investing, however, is like having a magic shield against this monetary monster. It's a way to grow your wealth and outpace inflation. With the right investments, your money doesn't just sit idle, it works for you, multiplying over time. It's like having a team of dollar bills running a marathon while you sit back and cheer them on. But it's not just about beating inflation or growing wealth. It's also about securing your financial future. Investing can be your ticket to a comfortable retirement, your child's education, or even that dream vacation you've always wanted. It's about taking control of your financial destiny. Comparing investing to saving is like comparing a race car to a bicycle. Sure, both can get you to the finish line, but one can get you there significantly faster and with a lot more thrill. So why should you care about investing? Because your financial future is too important to leave to chance. Investing isn't just about making more money, it's about securing your financial future. So what's the catch? Well, let's talk about risk and return. You see, investing is a lot like a roller coaster ride. It can be thrilling, exhilarating, and sometimes a little bit scary. But unlike a roller coaster, when it comes to investing, the highs and lows are not just about the thrill, they're about the potential for profit and the risk of loss. Risk and return are two sides of the same coin. In the world of investing, they're like the sun and the moon, inseparable and balancing each other out. Higher potential returns often come with higher risk. Think of it like this. If you're aiming for the stars, you have to be ready to ride the rocket, and rockets, well, they can be volatile. But fear not, my future investors, there's a way to manage this risk. It's called diversification. Imagine you're at a buffet. Instead of loading your plate with just one dish, you try a little bit of everything. That's diversification. You spread your investments across different asset classes, sectors, and geographical regions. This way, if one investment doesn't perform well, you have others that might. So in the grand scheme of things, diversification helps you mitigate risk while still giving you a chance to enjoy potential returns. It's like having your cake and eating it too, but in a sensible, calculated way. Remember, don't put all your eggs in one basket. Diversification is key. Now that you understand the basics, what exactly can you invest in? Let's delve into the vast ocean of investment options. First up, we have stocks. When you buy a stock, you're buying a piece of a company. It's like owning a slice of a giant pizza, each slice representing a company's success or failure. Stocks have the potential for high returns, but they're also associated with higher risk. Remember, the bigger the risk, the bigger the potential reward, or loss. Next, we have bonds. If stocks are slices of pizza, then bonds are IOUs from corporations or governments. You're essentially lending them money for a fixed period. In return, they promise to pay you back with interest. Bonds are generally considered less risky than stocks, but their potential returns are usually lower. Then we have mutual funds. Imagine a big basket filled with a mix of stocks, bonds, and other assets. That's a mutual fund. It's managed by professionals who try to beat the market. Mutual funds provide diversification, but they come with management fees. Real estate is another popular investment. It's not just about buying a house or a condo. You can also invest in commercial properties, rental properties, or even real estate investment trusts. Real estate can provide steady income and potential appreciation, but it also requires significant capital and management. Lastly, there are other types of investments such as commodities like gold or oil, and alternative investments like cryptocurrencies. These can be volatile and speculative, but they can also offer substantial returns. In the end, each investment type has its own set of potential benefits and drawbacks. Stocks can offer high returns but with high risk. Bonds provide steady income but with lower returns. Mutual funds offer diversification but with fees. Real estate requires significant capital but can provide steady income. Other investments can be volatile but offer potentially high returns. Different investments suit different people. What's crucial is understanding what you're putting your money into. So take the time to learn, analyze, and make informed decisions. After all, it's your hard-earned money we're talking about. All right, you're ready to start. But how, you may ask? Well, let's dive right in. First, you'll need to set your financial goals. Think about why you're investing. Is it for retirement, a down payment on a house, your child's education, or maybe just to grow your wealth? Your goals will guide your investment decisions. Next, you need to determine your risk tolerance. This is all about how much uncertainty you can handle in your investment returns. If the thought of losing money keeps you up at night, then you might be a conservative investor. But if you're okay with a roller coaster ride for potentially higher returns, then you might be more aggressive. It's all about finding what's comfortable for you. After you've set your goals and determined your risk tolerance, it's time to choose an investment platform. There are plenty of options out there, from traditional brokerage firms to robo-advisors. Do your research. Look for a platform that aligns with your needs and preferences. Some platforms are more user-friendly for beginners, while others offer more advanced tools for seasoned investors. Now, you're ready to make your first investment. But wait. Before you dive in, take a moment to educate yourself about the investment options available to you. Stocks, bonds, mutual funds, real estate, there's a whole world of possibilities out there. And remember, it's not about picking the best investment, it's about choosing investments that align with your goals and risk tolerance. Finally, once you've made your first investment, remember to keep an eye on your portfolio. Review it periodically to make sure it's still aligned with your goals. And remember, investing is a long-term game. Don't be discouraged by short-term market fluctuations. Stick to your plan and be patient. Investing isn't a one-size-fits-all journey. It's personal and unique to you. So, take your time, do your research, and most importantly, start. After all, the best time to start investing was yesterday. The second best time? That's right, it's today. Phew, that was a lot. Let's quickly recap. We've talked about an array of topics today, all centered around the fascinating world of investing. We started with an introduction to investing, where we established that investing is essentially the act of committing money or capital to an endeavor with the expectation of gaining additional income or profit. It's not just for the wealthy or the Wall Street tycoons, it's for anyone who dreams of financial independence and security. Then we moved on to why investing is important. We emphasized that investing is a critical tool for building wealth and achieving long-term financial goals, such as retirement, buying a home, or even starting a business. It's a way to make your money work for you, to grow over time, and to potentially outpace inflation. Our journey continued with understanding risk and return. We broke down the concept that investing always involves a certain level of risk. However, it's key to understand that higher potential returns usually come with higher risk. It's about finding the balance that matches your comfort level and financial goals. We also explored various types of investments, from stocks and bonds to mutual funds and real estate. The investment universe is vast and diverse. Each type of investment carries its own set of characteristics, risks, and potential returns. The key is to diversify your portfolio, spreading your investments across different asset classes to mitigate risk. Finally, we delved into how to start investing. We discussed practical steps like setting clear financial goals, understanding your risk tolerance, doing thorough research, and starting small. Remember, investing is not a sprint, it's a marathon. Patience and consistency are just as important as the money you put in. Investing may seem intimidating at first, but with knowledge and practice, you'll find it's not as scary as it seems. So get started. Your future self will thank you.